All right, today we are jumping into a big one. J.L. Collins's The Simple Path to Wealth. If you've ever felt like investing is just way too complicated or that financial freedom is a dream for other people, this one's for you. We're going to break down his super straightforward, no-nonsense approach to building actual wealth.
You know what I think is so cool about this book is where it came from. This isn't some stuffy textbook from a Wall Street guru. Nope. It literally started as a bunch of letters from a dad to his daughter, just trying to explain how money really works. And that simple personal foundation, that's what makes this whole thing so powerful and so easy for anyone to grasp.
Okay, so before we get into the how-to, we have to talk about the why. What's the actual goal here? Because it's not what you might think. We're not talking about Lamborghinis or giant mansions. The entire philosophy boils down to one single powerful idea: achieving your freedom. And Collins has a very colorful name for it: FU money. And this is it. This is the whole point: having enough in savings and investments that you are no longer a slave to a paycheck. Think about that. It's the power to walk away from a job you hate, a boss you can't stand, or just a career that doesn't light you up anymore. It's the freedom to say no, the freedom to choose every single day how you want to spend your time.
This is such a huge mental shift, right? We're all taught that being wealthy means buying more cars, bigger houses, more stuff. But Collins completely flips that script. He says the real prize, the ultimate luxury, isn't something you can buy at a mall. It's buying your own time back. It's buying your independence. True wealth is autonomy.
All right, so if that's the goal, what's the first step on the path? Well, before you can even start building that wealth machine, you have to face the first boss battle. You've got to conquer the one thing that's actively working to keep you trapped, and that enemy is debt. Seriously, think of debt like you're trying to run a race with a giant anchor tied to your leg. It's not just holding you back, it's actively pulling you in the wrong direction. Every single dollar you pay in interest is a dollar that could have been out there working for you, making more money. It's a guaranteed loss, and it's the biggest roadblock to your freedom. That's why getting rid of it has to be priority number one. So, how do you defeat this enemy? The battle plan is brilliantly simple. First, you list out all your debts. Not by how big they are, but by their interest rate. Then, you focus all your firepower, every spare dollar you have, on the debt with the highest interest rate. You just make minimum payments on everything else. Once that first one is history, you take all the money you were throwing at it and you aim it at the next one on the list. It creates this unstoppable financial snowball. Okay, so once the debt is gone, the anchor is cut. Now we can finally go on offense. It's time to actually build the machine that's going to generate your freedom. And the engine for that machine? The stock market. Collins is adamant about this. It's not some scary casino. It is hands down the most powerful tool for creating wealth the world has ever seen.
But here's where so many people go wrong, right? You see it all the time. They try to be clever, they chase hot stocks, they try to time the market, buy low, sell high, and you know what? Almost nobody can do it consistently. It's a loser's game. The real solution, the real path to winning, isn't about being more complex. It's about being radically simple.
And when I say simple, I mean, this is it. This is the entire investment strategy. For most people, you just need one thing: a total stock market index fund, something like VTSAX. This basically means you own a tiny little piece of every major company in the US stock market. If you want to own a piece of the rest of the world, you can add an international fund. And that's it. Seriously, no stock picking, no guesswork, just buy the whole haystack.
So you might be thinking, how on earth does this ridiculously simple plan beat all the Wall Street geniuses with their complicated strategies? Well, the answer comes down to conquering two big enemies that sabotage almost every investor: ridiculously high fees and your own emotions.
Let's break that down. You've got active funds, where some manager is getting paid a ton of money to try and pick winning stocks. That means high fees for you. Then you have index funds, which just buy the whole market. No genius manager needed, which means the fees are incredibly low. And here's the crazy part. Over the long haul, almost none of those expensive, actively managed funds actually manage to beat the boring, cheap index fund. They charge you more for worse results.
And what do those small fees really cost you? Let's talk about a mere 1% difference. It doesn't sound like much, does it? But over a 30-year career, that tiny 1% can literally cost you more than $250,000. Think about that. That's a house. That's years of your freedom, just gone. Poof, handed over in fees.
Now this whole thing, it's a marathon, not a sprint.
There are going to be scary times. The market's going to dip, it's going to crash. That's just what it does. It's totally normal. Your job is to ignore the screaming headlines and just stay the course. Because the real magic, the power of compounding, it doesn't really kick into high gear for a decade or more. Patience is everything.
This is the big one. When the market is crashing and everyone else is panicking and selling everything, your job is to do the exact opposite. You have to stay disciplined and keep investing. You have to think of it like the entire stock market is on sale. Every dollar you invest when things look bleak is a dollar that will work so much harder for you down the road. It is, without a doubt, the hardest part of this whole plan, but it's also the most important.
Okay, so let's fast forward. You've done it. The debt is gone. You've been investing your savings year after year, staying the course. So how do you know when you're done? How do you know when you've actually reached the top of the mountain? When do you have enough to be free? Well, you guessed it, there's a beautifully simple rule for that too.
4%. That's it. That is the magic number. It's the key that unlocks the door. It takes this vague, fuzzy idea of enough money and turns it into a hard, clear, mathematical target you can actually aim for. And here's how simple the math is. When the amount of money you need to live on for a whole year is equal to 4% of your total investment portfolio, you've made it. You are financially independent. You can then pull out that 4% every single year to live on, and historically speaking, your investment should still grow over time. You'll likely never run out of money. It's like you built your own perpetual paycheck machine.
Look, if you forget everything else we talked about, please remember this. This one sentence is the whole entire philosophy in a nutshell. Spend less than you earn, invest the surplus in low-cost index funds, and avoid debt like the plague. It's not sexy, it's not a get-rich-quick scheme, but man does it work.
And really, that's the whole journey. The simple path to wealth gives you the map. It's clear, it's proven. But a map is useless if you don't know where you're going. So the final question, the one you have to answer for yourself, isn't really about the money at all. It's about what that money buys you. Freedom. So let me ask you, what would you do with that freedom?